On middays with Gerard Gibbert, rolling into the afternoon on this Tuesday after Labor Day. Joining us now, Gordon Fellows, president of the Mississippi Bankers Association. Hey, Gordon, how are you today, sir?
Gerard, I'm doing well. Thanks for having me. And let me say congratulations on the new show. I'm excited for you. And on the flip side of the coin, I think this is my first time to be on with you since JT passed away. And certainly extended condolences to the whole SuperTalk family and to JT's family. That was a tough deal, but I'm happy for you here.
Appreciate that, Gordon. Thanks a lot, sir. Really appreciate that. So I suggested getting you on today. Talk to Alex Payton, our great content director, about scheduling you to talk about the Democrats up in Washington are just cooking up new schemes, new ways to generate more revenue. And one of those they are considering would affect your industry, your members most directly. And that there is a provision that would require reporting by financial institutions of all activity greater than $600 directly to the IRS. I think currently deposits, right, of $10,000 or more or greater are reported. We're talking about lowering that threshold all the way down to $600. And the idea that is being pronounced as part of this is that this would enable the IRS to, of course, use various algorithms to kind of match up that activity with one's tax return. And if something looks like it doesn't quite correspond, maybe you get a call and you get chosen the lucky one for an audit. What do you think?
Yeah, so it is really troubling. Just to add a little clarity here, so the $10,000 threshold is related to Bank Secrecy Act. So that's to make sure that there's not some sort of illicit activity happening. That gets reported to a different entity, a law enforcement entity called FinCEN. That's housed under Treasury, but that's not directly reported to the IRS. So it's a totally different and new regime. That $10,000 piece stays in place, and that's not going to go away. What's so troubling about this is it's not $600 in one transaction. It's $600 aggregate across the account over the course of a year. So that's $50 a month going in or out of a deposit account or a loan account. And that's an awfully low bar here. And really, maybe to give you a little bit of background, how do we get to this, right? So when the government wants to spend trillions of dollars, they got to come up with ways to fund it, right? And so somebody in Treasury or the IRS sort of said, well, maybe there's a way we can squeeze more money out of taxpayers. Maybe we can come up with another couple $40 or $50 billion a year, and that'll help cover $5 trillion or $3 trillion or $4 trillion or whatever the number is going to be dollars in new spending. And that just doesn't make a lot of sense to me. So this showed up in the president's proposal. It hasn't actually shown up in legislation yet. So that's an important distinction. But the president proposed what they called the Green Book for how to fund this multi-trillion-dollar program or collection of programs in June. And we started looking at it then. The Senate kind of went first with infrastructure. So we talked to our senators about it. Senator Hyde-Smith actually asked some pretty direct questions to Secretary Yellen about this in a hearing in June. And what struck me from that hearing was, on one hand, how do you keep taxpayer data safe, right? Like in June of this year, a lot of taxpayer data was leaked, right? So you mentioned Jeff Bezos in the segment before I joined you here. His tax data was made public in June of this year by ProPublica. So how did ProPublica get that? Did somebody hack the IRS? Did an IRS employee just leave work one day with a bunch of tax data on a bunch of individuals and make it public? We don't know yet, but to sort of say, so we asked, Senator Hyde-Smith asked Secretary Yellen, how are you going to keep this data safe? And Secretary Yellen said, well, we don't have enough resources to protect the data we have. We need Congress to give us more money so we can hire more people and do a better job with cybersecurity. And that was on one hand. And then on the other hand, 5 minutes later, the secretary said, we're also not getting enough data on Americans to really know if they're paying what they're supposed to pay. So we need more data, and we need the banks to give it to us. And that just doesn't make any kind of walking around sense to me, right? Like, get your house in order first, and then maybe talk about all this. But it is really troubling. Senator Wicker and some of the other lead Republicans that were involved in the transportation bill were able to keep this out of the transportation bill, right? Senator Sanders and Senator Warren and others really wanted to push this into the transportation bill, but a lot of smart people were able to keep it out on the Senate side. Now that it seems like the House is going to go forward with this budget reconciliation bill, and there's probably not going to be any Republican input in that. I think it's very high likelihood that this proposal gets included somehow in a House bill that comes out. So we haven't seen legislative language yet. We don't know exactly what it will look like, but the White House proposal is all bank accounts, all credit union accounts, all investment accounts that have an aggregate of $600 in a calendar year. Would have sort of all types of information related to those accounts reported. In addition, online payment folks, so like people like PayPal and Venmo, those kind of non-bank payment entities would also have to file reports with the IRS on transactions. And even crypto aggregators will have to file with the IRS.
Unbelievable.
So, and the White House proposal gives the IRS and the Treasury Secretary pretty broad leeway in putting together the rules as to how all this would play out. I think what's important for your audience today is to know this is out there. This has been flying under the radar because, when you're talking about $3.5 to $4 trillion, it's easy to get sort of sticker shock, and nobody really knows what's in it yet. But it's important to know this is out there. It's being discussed. Actually, Morning Consult did a poll on it that just came out. It's got 67% disapproval as an idea. 50%
Wow.
of Democrats don't approve of it. 73% of independents don't approve of it. So it's a very unpopular idea as of the poll that we've seen this morning. But it's also not getting a lot of attention. So I think it's important for account holders. If you have a banking relationship, if you spend money in any way, you probably need to reach out to Congress and tell them this is a bad idea and they need to be paying attention to it. Our House members understand it. They're engaged in it. Certainly our senators have been pushing back actively on this, but I'm afraid this is going to turn into one of those things where Joe Manchin, and maybe Kristen Sinema are the two people to decide whether or not this ultimately happens or not. I mean, you could foresee how it could get to that. So it's troubling for sure.
And I think it's fair to say, is it not, Gordon, that in terms of the cost of collecting, aggregating, providing, submitting, processing this information, there are costs associated with that. It just doesn't drop out of computers. And those costs have to be accounted for, recovered somehow from your members in the industry in general.
Absolutely, and the IRS has not done a cost-benefit analysis on this proposal at all, right? It will certainly cost money, and some of that will depend on how specific the regs would be once we see them. But it's not going to just be an easy thing for banks to gather all this data and report it. So yes, there will be an increased cost that ultimately is felt by consumers because of this, and if you start thinking about the dollars and cents of it, you're talking about increasing costs for maybe $45 billion in new funding a year, which is, a small percentage of $4.5 trillion. And that just doesn't make a lot of sense either. So you're talking about less than $500 billion in a 10-year period to help cover a $4.5 or $3.5 or whatever $trillion thing. It doesn't make any sense to me on the number side, on the security side, the risk side, or even sort of on the more, is this the traditional America we all sort of love, where you have the right to privacy?
It's unbelievable.
I don't understand it.
And as you're probably well aware, Gordon, there were lots of amendments that were filed, all defeated, to include lots of reporting from the crypto industry that were actually filed as amendments to the 1.5 trillion. There is no more billion in the federal government. $1.5 trillion infrastructure bill that did pass the Senate. Those amendments were defeated. None of them made it, but it's pretty clear they're coming after the crypto industry with a lot of energy as well.
Yeah, that's right. And I think you had one of my members, John Oxford, on to talk about
We
crypto
did.
a few weeks ago. He knows a lot more about that than I do. But yeah, that's an industry that's in the crosshairs for sure.
Gordon, appreciate you joining us and giving us some insight on that. Let's just hope that Republicans, and maybe we'll be joined by Manchin and Sinema, the senators that are more moderate in nature, to keeping this thing from becoming a reality. Really appreciate it. Thanks for joining us today, Gordon.
Yeah, thank you for having me. Like I said, it's clearly unpopular, so folks just need to know about this. It's been flying under the radar for too long, so thanks for giving me an opportunity to talk about it.
You got it. We'll talk soon. We'll be right back here on Middays after these messages. Stay with us.